So, good evening, everyone. I'm Rajarajeshwari, a chartered accountant, cost accountant, and a company secretary. And I'll be taking you to a very interesting topic, namely Limited Liability Partnership Act, LLP Act, which we call in short. So, if one asked me, what is LLP? Now, earlier we have heard of various organizations, company, then we have heard about partnership firm. But now the new concept was introduced, limited liability and a partnership. So it is actually in between a company form, it takes both the benefits of a company and a partnership. So what is the advantage of a company? What is the advantage of partnership? So that we will be seeing. And before proceeding, if you have any doubts, you can just ask me. But my way of that, first I will tell you the concepts. And in this class, you will also know, being a law paper, first reading that law is important. And how to write it in the examination, that is an art. Reading the question, what is expected. And during that thing, I will be telling you all those things. What are how you should have to write, where you have to give emphasis, and what are all the keywords in law which you should have to write it in the examination. So all these things I will be covering in this class, right? So coming to the topic, limited liability. So it is taking the advantage of company and the partnership. What is the advantage of partnership? So can you think of what is the advantage? Two partners, one might say. And what is the benefit? In partnership, there is no limited liability. A partner is acting as an agent for all, and it is acting for all, or any of them acting for all, right? Whereas for a company, it is a limited liability. It has got a separate legal personality, can enter into a contract. So likewise, this LLP Act also has been enacted. There was a constitution, or there is a form of corporate business vehicle wherein you get the benefit of company as well as the partnership. So that is the main advantage. Flexibility. Now everything should be flexible. Only then it is easier for us to carry on the business, right? So how it was formed, that we will see one by one. So mainly the partners are there, and they can join the LLP. So we will see, if we look into it, it was notified by Ministry of Law and Justice on 9th January. Or probably the dates you should have to remember, because in MCQs one might be tested on it. So ultimately it is a Limited Liability Partnership Act 2008 only. Though it came into effect from 31st March, you will find here that it is Ministry of Law and Justice. It was on 9th January 2007. And see, if this is 9th January 2007, it was notified by the Ministry of Law and Justice. But how the rule goes, it has to be passed by the Parliament. So it was passed by the Parliament, that is the next date, 12th December 2008. Then the President should have to give his consent of passing of the bill. Only then the bill can be passed, right? So he gave his consent on 7th January 2009, and it was ultimately came into effect on 31st March 2009. But we take it as Partnership Act 2008, and it extends to whole of India. What is this whole of India? In certain acts, you will find that except Jammu and Kashmir, and some except this. So it is nothing of that sort. It extends to whole of India. That is the concept with respect to this LLP bill. Now, how many sections does it have? How many schedules does it have? That we should have to see. See, for any act, it will have certain sections and schedules, right? As far as LLP Act is concerned, it has 81 sections and 4 schedules. So it has got 81 sections and it has got 4 schedules. So schedule 1, schedule 2, schedule 3. Suppose you have it as schedule 1. What is that schedule? That is the general mutual rights and liabilities of the partners. That is being specified in first schedule. So mutual rights and liabilities of, mutual rights and duties of partners has been specified in schedule 1. Now, how to remember the other 3 schedules? Which is the easier one? First, you have got a firm. Then the next thing is private limited company. And then it is a listed company. So it is the second schedule, third schedule, and fourth schedule. So that gives you, that paves way for conversion of firm into LLP. Now one may ask whether I've started LLP or I want to convert that firm into LLP. Is it possible? Yes. This second schedule read with section 55 of the LLP Act. Later you will be reading that. When I come across that, I will also insist on that. So second schedule read with section 55 of the LLP Act provides conversion of firm into LLP. That is possible. Then third schedule that allows conversion of private company into an LLP. Third schedule read with section 56 of, this is LLP. I am talking about, this is LLP Act section 56. Then fourth schedule read with section 57 allows conversion of unlisted company into LLP Act. So firm, private company and unlisted company can be converted to LLP. An unlisted public company cannot be converted to LLP. That is an important thing that one should have to bear it in mind. So unlisted public company cannot be converted to LLP. Right? Then. Now, MCA, Ministry of Corporate Affairs and ROC is entrusted with administration. Then Central Government of India has got the authority to frame the rules and it can amend them by notifications in the official gazette. And Partnership Act, there is a separate Partnership Act. That act is not applicable to LLP. So, Indian Partnership Act is not applicable to this LLP. That is separate, that is applicable only to partners. LLP, for LLP Act is applicable. So we have this is the advantage, company plus partnership. You have this limited liability partnership. Now, why should we need this? If we see, it is an alternative, as I discussed before, it is an alternative to traditional partnership. See, in traditional partnership, you have got only one possibility. Now you have got one more form wherein you can form as LLP. For example, if a firm of chartered accountants want to form an LLP and do a thing, it is similar to a partnership. You might be doing working under them also. Some of them, we will find that a firm of chartered accountants, they have also formed ABC LLP. So that will be there and they can continue to do the business. So it is, and instead of that alternative partnership, it is there, and it is also a statute-based governance structure. Why statute-based? A separate act has been formed, and based on that, you have with limited liability of the company, or a statute-based structure of the limited liability of the company also, you have this benefit. And for professional expertise, a CA can start. A firm of chartered accountants can start this LLP and they can do the business. Fine is that it is flexible and you can function in an efficient manner. That is possible. And you can also see how many partners you want, what should be your thing. You can have an agreement. LLP agreement will be entered into between the LLP and the partners. Based on that, they can see. So there is a flexible structure, internal structure, based on the mutual arrived agreement between the LLP and the partners. That is possible. And not only that, they can provide the services of any kind. You can combine together and you can have a LLP of any kind, and you can form an efficiently suitable vehicle or that form to do the business. That is also possible. And even small enterprises, venture capital, a budding person, so he can also do it. So it is for these reasons an LLP is required. If they ask you what is the need for LLP, and whatever I have highlighted in bold, that is very important. That is how you should have to write those points. 1, 2, you can point them out. 1, 2, 3, 4, 5, and you can write it. So this is why we need this LLP, and basically it is a alternative to partnership, and it provides a professional for professional expertise or a flexibility in making an agreement between the LLP and the partners, useful for small enterprises and for professionals to form a suitable vehicle or form to do their business. Then, what is the meaning of LLP? See, subtle differences there. If they ask you the meaning and the concept, it is a new form. Earlier we had only partnership. Now it is a new form. Only with Companies Act 2013, this I'm sorry, that is 2008 it was formed. Then before that 1956 Act was there, and after that 2013 Act was there. So in between at that time, it was a new form of business which was enacted in 2008. So that is a new form of legal business, and it is an alternate corporate business vehicle or corporate form. You can have it. And the same thing, internal structure, flexibility of the internal structure. And LLP is liable for the full extent of its assets. The partners are not liable. They have a limited liability, right? So the LLP itself will be liable for the full extent of its assets. It has got a separate legal entity. LLP has got a separate legal entity as that of its partners. So LLP is only liable for the full extent of its assets. Whatever is their assets, it is only liable. And the partners, what about their partners? They are liable to the extent of their capital contributed by them. So only to that extent they are liable, limited to the extent of their capital contribution. Now we'll see the definitions. Whenever there is a definition, generally it is section 2 talks about the definition. The first section or section 2 talks about the definition of various things. It starts from, we all know that it is from alphabetical order. It starts from A to Z. So what is an address? if it is it could be an individual or it could be a body corporate. For an individual, we can say the usual residential address is his address in relation to a partner. If it is a body corporate, then the address of its registered office. For a body corporate, it is a registered office. For an individual, his usual residential address. That can be seen. Then what is a body corporate? So here there is link has been taken to the Companies Act 2013. Subsequently, it was there. And a company as defined in clause 20 of section 2 of Companies Act, and see this and is there. And includes, excludes. See, generally a definition could be an inclusive definition or exhaustive definition. What is inclusive definition? What is exhaustive definition? Inclusive definition means you can include, this is also included, the second is also included, third is also included, it is included. So you can keep on adding. So this is it includes, means and includes. See, there is a means and includes. It is an inclusive definition, means and includes. You can write 1, 2, 3. So 3 things are included. First one, an LLP registered under this act. The second one, LLP incorporated outside India, and a company incorporated outside India. So these 3 are included in this definition. And sometimes it may stop with this. But here it also specifies does not include. So what is that it is not included? Corporation sole or a cooperative society or a body corporate, which a central government may note by notification specify, these 3 things are excluded. So a corporation sole is not included. A cooperative society is not included. It is excluded. And any other body corporate. So any other body corporate which the central government may, by notification in the official gazette, specify in this behalf. So 3 things are included, 3 things are excluded. So this is an example of inclusive definition. What is exhaustive definition? If I say what is a foreign, which is other than this, or you can say exhaustively you define, this is only this, it is limited to this. You can't include that. So that you call it as an exhaustive definition. Now this is an inclusive definition. So means and includes, one should have to remember whether what are all the items included and whether the definition also specifies about excluding what it does not, or excluding that it might say, but here it has been specified but does not include. It is very clear. So quick, if one wants to say body corporate means a company as defined in Companies Act 2013 and includes, what are the things? An LLP registered under this act. So LLP is also a body corporate. An LLP incorporated outside India, a company incorporated outside India, that is also included as a body corporate. But the following are not, but does not include a cooperative society or a corporation sole or any other body corporate which the central government may specify by notification in this behalf. So that should have to be specified for this definition. So 3 points included, 3 points excluded. That should have to be specified. Then business. You see here in anything means, includes, business, if we take, it includes every trade, profession, service, occupation, except any activity which the central government may by notification. Whenever the central government says it, it is in writing, so it specifies in the by notification in the official gazette, it will specify which the central government may by notification exclude. So any other activity which it is excluded, that is not considered. Then a chartered accountant means a chartered accountant as defined in the Chartered Accountants Act, and it is and who has obtained a certificate of practice. So two things, a chartered accountant under the Chartered Accountants Act and a person who has obtained a certificate of practice. So those 2 points are to be covered in the definition of the chartered accountant. Then designated partner, any partner designated person as such pursuant to section 7. Then entity, see here also it is means and includes. See, it is means and includes. A firm set up under the Indian Partnership Act, that is also considered as an entity. Yes, I could see the questions. I will be dealing with it one by one. That is, what is the main object for bringing this act, etc. Yes, Nagaraja and Gulti Anil, Kuldeep, I will be concentrating on that. We will be doing that when we come across that. So I'll also tell you what is the need for it. See, it has for a partnership, you have got a unlimited liability. Whereas for company, it is the laborious process practically. So in between, you want to take the benefit of both. So this LLP was created. So that is the main reason for creation of this LLP. See, for the further questions which you have asked, we will be dealing with it when we can come across that. So I will be answering that when I come across that. I've noted your query. So I will be handling that when I come across that. See, and for a financial year for an LLP. So one might ask, see the general rule, even for a company or for an LLP. Now, when it was incorporated, that will be the first day. Generally, we have the uniform financial year from 1st April to 31st March. If it is 2025, 1/4/2025 to 31/3/2026. Suppose if I incorporate an LLP today, 17th November 2025, I am incorporating an LLP. So my first financial year will start from the date of incorporation, whenever I was incorporated, where the certificate of registration has been obtained from the registrar. That is the evidence that the LLP has been started. So that is the first day, or that is the day on which LLP was born. So from that date till 31st March, you can keep your first financial year. Right? Now the law specifies or gives you a flexibility. Suppose if it is only 3 months, you have started your LLP on January 1st, 2026 or November 17th, you have started an LLP. It provides a flexibility for the first year alone. You can have the accounts made Instead of a shorter period, you can have the accounts up to 18 months. Normally, a financial year will consist of 12 months. For the financial year, for the first financial year, you can prepare your accounts for 18 months. So for that, when will 18 months will be there? 12 months plus 6 will become 18, right? So the law has specified after 30th September, if you have incorporated the LLP, then 6 months from current year and 12 months of the next year put together, you can compile the accounts and you can submit the accounts. This is there only for Companies Act. For income tax, you should have to have your full uniform financial year only. You have to pay the tax. That is separate. So for the first year alone, so it is after 30th day of September. If an LLP is incorporated. So here 6 months. So 6 months plus 12. So you have got put together, it is 18 months. This is only for the first financial year. For the subsequent financial year, it will be only April 1st to March 31st. That is how it is being done. So can maintain it accounts for less than, if it wants, it can also maintain it for less than 12 months. Nobody is going to question you. It may. So the company can maintain the financial year may end. The may means it is here an optional thing. May end. It is optional. For less than, it can also end if it is November 17th. Today I am incorporating. So either I can have it from 17th November 2025 to 31/3/2026, or I can have it from 17th November 2025 to 31/3/2027 also. I can close it. So for 25, I've got 2 months, assume 2 months. Then for for calendar year 26, I've got 12 months. Then for till 31st March, I've got 3 months. So 15 plus 2, 17 months, which is less than 18 months. So it is allowed, right? For the first, they may test you on that MCQ. If it was incorporated on 17th November, you can have it only from 17th November. The first day will start from the date of incorporation or financial, whichever is earlier, that you can do. So if it was incorporated only on 17/11, from this date to the whatever is the possible date, either 31/3/2026 or 2027, you can have the financial year. That is possible. Yes. Now, LLP, foreign LLP. What is a foreign LLP? When we say foreign LLP, it is incorporated outside India. Suppose if it is incorporated outside India, it has no business connection in India, we are not bothered about it. But which has a place of business within India. It is formed, incorporated, registered outside India, and it has a place of business within India. So that is called as a foreign LLP. What is an LLP agreement? See, I told you the LLP will have an agreement, like you have a partnership agreement. There should be, it is a flexible structure like partnership. So there should be an agreement between the LLP and the partners. right? So this LLP agreement has been entered into. The written agreement, see, any agreement that should be written, it cannot be oral. So to be legally binding. So between the partners, among the partners, what are their duties and liabilities that can be enforced? Then between the LLP and the partners, what is the agreement that they have entered into? Everything will be written in that agreement. That determines what are their mutual rights and duties. Duties, it is mandatory. Rights, optional. So they can exercise the right, they need not exercise the right. Duty, mandatorily, compulsorily, they have to do it. So among the partners and the LLP, what is the thing? And we saw in the first schedule, what is the mutual rights and duties. Second schedule talks about conversion of firm into LLP. Then we saw that now. So the first schedule, if it is the act is silent, the first schedule shall be applicable for all matters not covered by the agreement. Like you had for a company, no, for Companies Act, Table A will automatically apply if the act is silent. Likewise, for an LLP, if the agreement is silent, then you have to make use, you have to refer first schedule of the LLP Act, and that provisions will be applicable if the act is silent on that. Then name. In relation to a partner, if it is an individual, his forename, middle name, and surname. All the three are included. If it is a body corporate, the registered name at which it is there. Whatever name has been specified in the certificate of incorporation, that is the registered name. It is case sensitive. Capital or small alphabet, that you should have to exactly follow. Or if it is a combination, the name should have to be written in the same thing. Whatever has been specified in the certificate of incorporation, that is the registered name. Then partner. In relation to an LLP means, here also you will find that in relation to a partnership, limited liability partnership means a person who becomes a partner in the LLP in accordance with the LLP agreement. So these two things you have to write it. Who becomes a partner in accordance with the LLP agreement. Then regional director, a person appointed as such, RD we call it as. Certain cases RD's approval is required. So in short, we just write it as RD, regional director. Registrar. So who is a registrar? By what or name? It could be a registrar as additional registrar, joint registrar, deputy registrar, or assistant registrar. Whatever it is, you have to, it is included. Then, small limited liability partnership. See, what is a small? So here, the Act defines, taking into criteria, two things. One is turnover. Other one is contribution by the people or by the partners. So these two are the criteria based on which it is defined as a small limited liability partnership. The contribution does not exceed. Does not exceed means maximum is 25 lakhs. It could be 5 lakhs. It could be anything, but it should not be more than 25 lakhs. It can, and the turnover as per the statement of accounts and solvency. See, this statement has to be prepared by the LLP with the registrar apart from annual return. So two documents it will file. With the later you will be learning all those things. What is the filing of the documents, when it should have to be filed and everything. So the statement of accounts and solvency for the immediately preceding financial year does not exceed 40 lakhs. So it is two things. For the contribution should be not does not exceed. So that's why I've written up to 40 lakhs. Turnover contribution is 25 lakhs up to. The maximum is 25 lakhs and turnover for the immediately preceding financial year, it is up to 40 lakhs. Then what about this not exceeding 5 crores and not exceeding 50 crores? The central government, so today and in 2025, you are learning it is 5 crores or it is 25 lakhs and 40 lakhs. What in 2027 or next year the government makes a change? It can increase this limit. 25 lakhs could be updated to 30 lakhs, 35 lakhs, 40 lakhs. It could be like that, no? So it can keep on increasing, not exceeding 5 crores or such higher amount, not exceeding 5 crores as may be prescribed. So in writing, in definition, it has been defined. So the government has got the limit. So it is not exceeding 5 crores. And similarly for turnover, it should not exceed 40 lakhs, does not exceed 40 lakhs or such higher amount, not exceeding 50 crore rupees as may be prescribed. This is 5 crores and this is 50 crores. That is for the, so here I will write, here it is 5 crores. Here it is 50 crores. This is the second limb of the definition. But contribution, if it is a small limited liability partnership, it is only 25 lakhs. Contribution should be, maximum should be 25 lakhs. Turnover, maximum is only 40 lakhs. Up to 40 lakhs it can write. But when you write, if they ask you the definition, does not exceed. For your understanding, this has been specified. And fulfills such terms and conditions as may be prescribed. Whatever conditions they have prescribed, that too needs to be fulfilled. So 3 points you should have to write: contribution, turnover, and fulfillment of the prescribed terms and conditions. Only then it is complete. See, for I told you about this foreign LLP. It has a place of business in India. When it has a place of business, it also does some business. Say why we are having a place of business in India. We are doing some transactions that is there. Probably buying and selling or a commission is being there, or it could be some nature of business is being carried on. We have to look into what is the role that the establishment does. So where it has a place of business in India, it is doing business, it is conducting a business in any manner, then you take it as a place of business. Only then you will correlate it to within India. Otherwise, there is no need for opening that in India, right? If it is not in India, we will not be bothered about this foreign LLP. If it is, for example, I will tell you, if it is opened in Singapore and it is doing transactions in Japan, why is India bothered about it, right? So for foreign LLP, it has a place, some connection is there in India. Only then we call it as a foreign LLP, but it has got some connection in India. So what is that connection? Place of business. It is doing some business in India. So we call it as a foreign LLP, right? Yes, Guldeep, it is 5 crores and 50 crores is for the entire business. That is, the government has set the limits. This is 5 crores and 50 crores. This small limited liability partnership, even in small company, in Companies Act, you will be learning that. So there you have to write this, but the main crux is only this 25 lakhs and 40 lakhs. It will be tested. So this alone you should have to remember. These two things you have to remember, and this only is tested. If it is, you check what is the criterion should check. The contribution less than 25 lakhs. And it is not or, it is and. This and is very important. And both the conditions, what is the meaning for this and? Both the conditions should be cumulatively satisfied. Only if this is satisfied, contribution is also less than 25, turnover is also less than 40 crores, only then it is called as a small limited liability partnership. Suppose the turnover exceeds 45 lakhs, then this condition is lost. So it is not or, it is and. Both the conditions should be cumulatively satisfied. That is important. Right? Now we'll see what are all the characteristics of LLP. So this is mutual agency. We'll see one by one. LLP is a body corporate. We learned in the definition of body corporate, it includes a quick recap of what we learned in body corporate. It includes a company, an LLP registered under this act, right? So LLP, a characteristic of a company, it is a body corporate, right? So characteristics of LLP, LLP is a body corporate. It has got a separate legal entity, separate from that of its partners. Perpetual succession means irrespective of the change in the partners, it continues forever. See, in a partnership, if all the partners die, the partnership comes to an end, or if they become insolvent, or if they become an unsound mind. See, you would have learnt in your contract who are the person who are eligible to enter into a contract. He should be of sound age, sound mind, and not expressly disqualified. So, a person if he is of unsound mind, or if he has adjudicated as insolvent, or he has applied to be adjudicated as insolvent, so those persons cannot become a partner. So in that case, a separate legal entity, what is that? Even if all the partners are not alive, still it continues with the remaining partners, or a new partners will be taken into consideration, and that is the meaning of this perpetual succession. Succession means one after the other. So any change in partners does not affect the existence. And here, death, perpetual succession, death, insanity, retirement, or insolvency of partners has no impact on the existence of LLP. So it continues. The LLP, suppose I have started ABC LLP, that ABC LLP will continue its operations even if all the three have become insolvent. Still, it is there, that LLP will be there. You will take steps to get the new partner. So that will be done, but it doesn't lose its identity like a partnership. That is the thing. Someone was asking me, what is the benefit for this? What is the motto? This is also one of the thing. It's not too complicated as a company, or not for it has got a separate legal entity which is not there for a partnership. Once the partner becomes insolvent, the partnership is wound off. So you have got a separate legal entity. So we saw one of the need for this LLP. The LLP is liable to the full extent of its assets, but the liability for the partners, they are liable only to the extent of their agreed contribution. So whatever A has contributed, agreed. Whatever B has agreed, whatever C has agreed, they are liable only to the extent of their limited contribution, what they have agreed. So agreed contribution in the LLP, only to that extent they are liable. So creditors of LLP shall be creditors of LLP alone. So who is a creditor? The balance sheet, you will have a liability, right? So a creditor, this liability who is liable? Only the LLP is liable. The partners cannot be asked to contribute for what the LLP has agreed to enter into. So the LLP is only liable to the creditors, right? That is the concept here. Then you have got, it is a mutual agency. All partners will be agents of LLP alone. In partnership, you will have that partner is acting as an, it is a definition goes by that any of them acting for all. Partner act, it is one partner acts for as an agent for the other partner, but here it is no such concept. It is the agents of LLP alone, and no one partner can bind the other partner by his acts. That's not possible. So this is one, we will be seeing the difference between LLP and partnership, that I will also insist on that. So this is only, no partner can bind the other partner by his acts. Then LLP agreement. So they are governed by this LLP agreement, and in the absence of an agreement, Schedule 1 will be applicable. So mutual rights and duties of partners are governed by that agreement. Then artificial legal person. See how it is created. LLP is created. You send the documents to the registrar, and the registrar issues a certificate. That is the conclusive evidence that this LLP is incorporated. So it is created by a legal process. Only legal process can put an end to it also. So it is invisible, intangible, immortal. It can be dissolved by law alone. It was created by law. It can be dissolved only by law. You can, later we'll be seeing what are the instances where the LLP can be wound up, because it really exists. So it is invisible, intangible, and immortal. It can be dissolved by law only. Law creates, law can only dissolve. Then common seal. See, one thing, the what is we are hearing about common seal, what is that? Earlier we had that embossed thing for share certificate or for loan agreement. We used to affix this common seal. Common seal is that it is the official signature of the company. So once the common seal is there, that is the proof that the company has, it is the signature of the company. So that was made use by common seal. But now with the Companies Act 2013, that common seal concept has gone. It is not mandatory. So as per this LLP Act also, it is not mandatory for an LLP to have a common seal. If they want, they can have it. No harm, they can have it. But if they have it, it should be under the custody of some responsible person, because you cannot use it by mistake. You cannot affix that in any document. That means putting the company's signature. So the company LLP or the LLP is responsible. So you cannot put the LLP signature in that any document. So it should be kept under the custody of some responsible official who has to say for which document he is using it, and it should be affixed only in the presence of at least 2 designated partners. Only with them you should have to do it. So the law is very strict in this. You don't have, it's not mandatory, but if you are having it, it should be kept under the custody of a person. Then limited liability. What is a limited liability? It is only limited to their agreed contribution in the LLP. It could be a tangible or intangible nature or the name, whatever it is, that they can do it, and they are liable only to that extent. Then management. The partners are entitled to manage the business, right? But for legal compliances, for signing a document for thing, there is something called as designated partners. So among the partners, two persons will be the designated as designated partners. So they should only sign, they should only give their thing all for all legal complaints purpose. The designated partners are only responsible. Though a company can have more partners, two partners will be construed as a designated partners that will be defined by the LLP. So they are only responsible for legal complaints. That has to be ensured. Then, what is the minimum partners and maximum partners? Maximum, no limit. So minimum partners, at least two designated partners. And one of whom, that is, they should be, at least one should be resident in India. And there is no maximum limit for the partners. That is not there. So minimum of two partners, at least two individuals are as designated partners. It can have 5 partners. A partnership can be 5, but 2 will be designated, construed as a 2 individuals, out of whom 2 will be designated partners. And of whom 1 should be resident in India. And there is no maximum limit. Then business for profit only. See, I saw a query. Can LLP be started for charitable purpose? No. Hope it answers your query. Nagaraj. LLP forming for charitable trust, it is not possible. It is only for, cannot be formed for charitable. It is business for profit only. So for profit motive only, you are given this opportunity to start an LLP. For charitable thing, you start a separate company, or you do business separately, or that's not a business actually, for not for profit organization. So as far as LLP is concerned, it is only for profit. That is a very important point. They can test you on this. Then investigation. See that investigation is a very costly word. Investigate. It is not, investigate means right from the scratch, they are going to investigate. Right from the scratch. It is a very costly word. Or investigation means right from the beginning. At any point they can do it. So the central government has got powers to investigate the affairs of an LNP. By competent authority will be appointed for that. Then, what is a compromise or arrangement? Compromise or arrangement we will be learning in detail. It includes merger and amalgamation of LLP. One LLP can be amalgamated with another LLP, or one LLP can be merged with another LLP. That we will be seeing soon. Then, sorry. So conversion of LLP. So a firm, private company, or an unlisted company. What is this thing? Where did we learn this? We learnt it in schedule 2, second schedule, third schedule, and fourth schedule, right? We saw a firm, private company, or an unlisted public company. But a listed public company, you cannot, it is not allowed to be converted to LLP. See, we saw here. Unlisted company, but unlisted public company cannot be converted into LLP. I stand the printing typographical error. See here I stand, it's an error. Unlisted company would be allowed to convert it to LLP. Then there is an e-filing of documents. Now previously we used to file it physically. Now everything is made online. So it is whatever is the document that you use it with the help of electronic or digital signature, that you make use of it and you file the document. Authenticated by a partner or a designated partner of the LLP by use of electronic or digital signature. So you can file it in the website. There is everything for Companies Act, for LLP. This website is being used. Ministry of Corporate Affairs. So this is the official website where we used to file the documents. So you have to submit the documents, any form, application, if a partner is admitted. So that should have to be intimated to the registrar. So again, you have to go there and fill the form and get his consent, prior consent, and you have to submit it there. So everything is done. E-filing of documents is done. And it is using the digital signature. Digital signature because you cannot sign it physically when you are filing it online. So we make use of this digital signature. Then foreign LLP. So it defines foreign limited liability partnership. Again, it is a characteristic. Here also we refer that we had a separate definition. So 2 and M, here we are taking that definition also. Formed, incorporated or registered outside India, which established a place of business in India. So they can become a partner in an Indian LLP. That is possible. So what are all the advantages of this LLP if we see? It is easy to form, easy to dissolve. Easy to form and easy to dissolve. And limited liability partnership. So each partner will have a limited liability. And you have an LLP agreement. So LLP agreement is there. So based on that only, the LLP is operated. Capital structure is flexible. You have got a flexible capital structure. And it is not as cumbersome as formation of company. So LLP is very easy to form. So these are the advantages of LLP. We'll proceed with the next thing. Anyway. Who are all partners that we will see? See, it could be an individual or a body corporate, may be a partner in an LLP. One thing, just a minute, I will. So who are all partners? An individual can become a partner, or a body corporate can be a partner. But one thing, as discussed before, he should not be of unsound mind. However, a person cannot be capable of becoming a partner if he is of unsound mind and the finding is in force. See, unsound mind, if was partially he was there, he has gone, he becomes sound mind later. That is, we are not bothered about it. While he is of unsound mind, he cannot enter into a contract. And that's why the wording is, and the finding is in force. He is an undischarged insolvent, or he has applied to be adjudicated as an insolvent and his application is pending. So in these three cases, 1, 2, and 3, A, B, and C, a person cannot be a partner. This is a disqualification for a partner. Then who can be a partners in LLP? All these persons can become a partners in LLP. Who are they? Individuals can be resident Indians, including NRIs. So they can be a partner in that LLP. Just a minute, I will go to that. Okay. So who can be partners in LLP? That if you see, so the following persons can be partners in that LLP. Individuals, so including resident Indians and NRIs, he can be a thing. And limited liability partnership. So one LLP can be a partner in companies, including foreign companies. But wherever the star is there, whenever there is a thing, FDA compliances should have to be undertaken, foreign direct investment compliances. So they are, when they become a partner, they contribute to the partnership, right? So when foreign currency is involved, RBI will come into the picture. So foreign direct investment compliances should have to be undertaken when the foreigners or foreign they make a contribution, or when Indian currency goes outside, RBI comes into the picture. So FDI compliances should have to be taken if you are going to, if a foreign contribution is involved. So those compliances should have to be undertaken by LLP. So foreign LLPs could be there, or limited liability partnership incorporated outside India, or a foreign company could be there. Right? Next thing. Minimum number of partners. We saw that it should have at least 2 partners. Every LLP should have at least 2 partners. And if it is, what will happen? You might ask me a question. Ma'am, what will happen if it is reduced below 2? If an LLP continues after reducing it below 2, or only one partner is continuing, then he becomes liable. And if that business is carried on for more than 6 months, and the partner also knows that there is no other partner, he is only continuing as an LLP partner, then he is liable personally also for that, any obligations incurred during that time. So that is very, very important. So it should have at least 2 partners. At least means minimum. two partners. And if any time it is reduced below 2, so only one, A and B are partners. A has resigned, only B continues as a partner. So B knows very well that he is the only partner. So in that case, the LLP carries on business for more than 6 months while the number is so reduced. That is, with one partner, the LLP is carrying on a business for more than 6 months. Then the person who is the only partner. Now let me take an example. B is the only partner. In this case, the person who is the only partner of the LLP during the time that it so carries on business, after those 6 months, and the B has the knowledge of the fact that it is carrying on business with him alone. The other partner is not there. He is the only partner there. Then B shall be liable personally for the obligations incurred during that period. This is a very important thing. So more than 6 months, a person should not carry business. You have to appoint another person. With reduced thing, you are not supposed to carry on the business. That is there. No, for Golti, Anil, it is FDA complaints, it is just a concept which I said. You need not study FDA compliances and all. The LLP Act is sufficient, but I have to specify, so I have said that. So here this B is liable. The B is the partner. He is liable for the acts done, while the LLP is running only with him. That is the concept, minimum number of partners. It need not be wound up when the number is getting reduced. You need not wind off the LLP, but the rule says is that he is personally liable. You should have to understand the concept, why it is being said. When it carries on the business, nobody is saying that you should not carry on the business. The liability is that it is limited liability partnership. But in this case, when one partner only carries on the business, then he is personally liable. That is the concept. Not that it should be wound off. You can get the thing. The law says that, or the act says that that person who's carrying on the business with him as a partner, he is aware of the fact, then he is liable. So what you should have to do, don't enter into the obligations, anything. Then you are not held liable personally. You are liable personally. For what you are liable? You are liable for the obligations entered into. If you have not entered into any obligations, then there is no liability for you. See, this is for the second limb is also important. He is liable personally. This is correlated with for the obligations of the LLP incurred during that period. So only one partner is there, so he is liable for that. Yes, Anil, you are right. So the general rule is that it is unlimited liability. So exception, I can twist the question now. When he is liable personally, this is the only place where he is liable personally if the LLP is being run by only one partner and the business is carried on for more than 6 months. Without, after that, if he is carrying on and he has a knowledge of the fact that he is being carried with him alone, then he is personally liable. It is and everywhere. So this is a peculiar situation where he is held personally liable. In other cases, it is only limited liability partners. I can say limited liability. You can give if they ask you limited liability partner, limited liability comment. When they ask you the word comment, you can include this point also. It is a peculiarity where he is liable personally. Right? Shall we proceed further? Designated partners. This is the peculiarity in LLP. You have DP. designated partners. At least a minimum of two partners should be there. One of them should be a resident in India. So every LLP shall have, see, you should have to understand the word shall, may. You cannot write can have. It is wrong. Every LLP shall have. When I use the word or when the word shall is used, it is mandatory, no option. May, that is very important. You cannot substitute that with any other thing. It should be, let me put it, shall. I will write it, shall. Shall means mandatory. There is no option. You should have to have it. So in the basis of should, every LLP shall have, that is should have, in that meaning it comes, at least two designated partners who are individuals. See, even LLP incorporated outside India, partners could be anything. But for you to designate as DP, only individuals can be designated as designated partners. So they go by that name DP, designated partners. See, they have to comply with the rules and regulations, compliance formalities. They are only responsible. Those two persons are only responsible. Now, if both are outside India, so who will take care of that? So they have put a restriction. The act says at least one of them should be resident in India. See, if both are outside India, they can say no. So one should have to take care of the complaints. So at least one of them should be resident in India. So who is resident in India? He should have to stay in India for at least 120 days. That is very important. So resident in India means, if you come here, resident in India means who has stayed in India for a period of not less than 120 days. So not less than 120 days means at least 120 days. So here it goes, at least, minimum 120 days he should have stayed in India. Provided that all the partners are bodies corporate. In that case, two individuals who are partners can be designated, in which one or more partners are individuals and body corporate. At least two individuals who are partners of such LLP or nominees of such bodies corporate. Say, I will give you a situation wherein now one is an individual, then two, it is a body corporate. Then you take for this body corporate a nominee. So this nominee and say this A is an individual. First is A is an individual. This A, they have nominated the B. So this A and B will be the designated partners. Only if there are only two partners, one is an individual, one is a body corporate, then that individual who is a partner plus a nominee of that body corporate shall act as designated partners. Is this clear? No, HUF cannot be a form part of LLP. I will tell you, we will come across that later. See, HUF cannot be a thing. I have not specified HUF. See, the definition of partners, there is no HUF there. I have not specified HUF. Specifically, HUF cannot be there. It excludes HUF. See, HUF, no. Only individuals who can become partners. In your material, if you see, this is highlighted in blue. I will also share that. See, this has been taken from your material only. See, this HUF cannot be a partner. Who can become partners? It has not specified HUF. So HUF is not a partner, cannot be a partner. Hope that clarifies your doubt. See, it is not 120 days at a stretch. They have not specified consecutive 120 days. The wordings doesn't specify, right? The wording says only 120 days. He should have stayed 120 days in a thing. See, for the for the disadvantages, we will see now. See, I will answer your question, Dev Kumar. That is what we will be going through all those things in the subsequent topics, which I am going to do. See, don't worry, I will make you understand. Right? So, HUF cannot be a partner. So, the concept is that designated partners, the Act says at least shall have at least two designated partners who are individuals. Why individuals? They should, they take care of the compliance formalities. So at least one should be resident in India. So if, when I stop with individuals alone, it could be a foreigner. So who will take care of the compliance? So one should be resident in India, make him accountable for the compliance. So one should be resident in India. When he is a resident in India, how many times how much days he should have stayed? See, the wording says not less than 120 days during the financial year. If your question, one have asked the question, is it at a stretch or continuous? If it is mandatory, they should have specified 120 consecutive days. They have not specified, they have not used the word consecutive days. It is only 120 days during the financial year. See, later you will be seeing 5 consecutive years. For that consecutive means at a stretch, 5 years, if they have defaulted. So there the word consecutive is very important. Here they have not used the word consecutive. So it is only any 120 days. It could be January or it could be at a stretch 119 days. He could stay one day in the first month. It could be any combination, but the rule says he should have stayed for 120 days in a year. He should have to ensure the compliance formalities. He should have to sign. Everything is there. So that is the concept. Then, if the incorporation, see it, use this the word if the incorporation document specifies who are to be the designated partners. Suppose it has specified A, B, C and A to E are partners. A, B, C, D, E are partners. They have specified only B and C are designated partners. DP. Then such persons means this such refers to whoever has been specified. Whoever has been specified, such persons. So in our example, B and C shall be designated partners on incorporation. If it is not mandatory, they have used the word if the incorporation document specifies, then if the incorporation document specifies B and C are to be designated partners, then B and C shall be designated partners on incorporation. If the incorporation document states that each of the partners are to be designated partners, so in our case, A, B, C and D, if they have specified each of the partners to be designated partner, every partner shall be designated partner. So in this case, A, B, C, D, E, all the 5 will be designated partners, DPs. They are responsible for complaints. Out of whom one should be resident in India. That is the concept. So this first limb, only these two, it stops with this, right? The first subdivision. Then second is something not connected with that, some other additional point. A partner may become a designated. Here, may. You should have to concentrate while reading. May become a designated partner by and in accordance with the LLP agreement, and a partner may cease to be a designated partner in accordance with the LLP agreement. So he is given an option. He may become a partner. He may cease to be a designated partner. That is possible. Shall not become a designated partner. So here this first part says when he can become a partner. Here when he shall not become a designated partner. Unless, when you use the word unless, both the conditions should be satisfied. Cumulatively, you should have to satisfy. He has given his prior consent. Not after somebody nominates it and then he becomes a prior consent means before designating him or before giving him as a designated partner, he should have to give his consent. Yes, I hereby give my consent to act as a designated partner. So prior consent is required and it should be in such form and manner. There is a separate form. Of course, we are not dealing in detail. So form, it is there. You can refer the thing. So for in that form only, you should have to give his consent. There is a separate form. So in such form and manner as may be prescribed. So it should be in that form. He should have to give that consent in that form. That should be filed with the RO registrar. And the prior consent should have to be filed. That should have to be intimated with the registrar. That is a must. Then every LLP shall file. Mandatory. What are all the points that you should have to file? You should have to write all the points. Right? In law, each word is important. You should have to read it in that way. The particulars, that's why I've given it in separate bulletin. The particulars of every individual, because we are talking about designated partners, who has given his consent, or you can even write it as prior consent, to act as designated partners in such form and manner. What is the time limit for filing it? Within 30 days of his appointment, you should have to file it with the registrar. So the time limit is 30 days from the date of appointment. You have to file it with the registrar. That is important. And when a person has been a designated partner, you should have to obtain DPIN, designated partner identification number. So in company, you have a director's identification number. Here it is a designated partner. So this is the name. So DPIN from the government. You have to apply for it. Even for DSC, they should have to apply for DPIN, this number, and if they want to have a digital signature certificate, even that DSC, they should have to get it. Of course, this can be done by any of the notified agencies, but DPIN should have to be obtained from the central government. Then, shall we proceed further? Liabilities of designated partners. What are the liabilities of the designated partner? That we will see. Unless expressly provided, otherwise in the act. So he is not responsible, he is not liable. They should have to contradictory, anything has been specified, then that will be applicable. So unless no contrary or expressly provided otherwise in this act, a designated partner shall be. So he is responsible for all the acts, matters and things as that has to be done by the LLP with regards to compliance of the provisions of this act. This act, it means LLP Act. We are talking about LLP. So LLP Act and any filing of the document. Say it could be a statement of solvency. It could be an annual return. It could be anything. So, or whatever is the report or the consent of the partner to act as a thing. So, that is a document, return, statement, whatever it is. Each one is a thing. And the like report. Any document, return, statement, and the like report. So, including filing. So, for all these things, the designated partner is responsible for compliance, including filing. That compliance includes filing. Pursuant to the provisions of this Act and as may be specified in the LLP agreement. And he is also liable, he is responsible, and he is also liable to all penalties imposed on the liability for any contravention. So he is not only responsible for compliance including filing, he is also liable for any contravention. These points should have to be specifically mentioned. Right? Then, changes in designated partners. When do you call it as a change? Any appointment is there or a partner leaves. So there is a change in the constitution. So a limited liability partnership may appoint a designated partner within 30 days of vacancy. So within 30 days, you should have to appoint another person. So that's why the person continues for more than 6 months. So your rule says when you have to appoint a designated partner within 30 days. When there are only two persons, those two should be designated partners and one partner is not there. The other partner continues for more than 6 months. So what is the rule? You link that point with this. The law says, section 9 says, within 30 days of a vacancy, you should have to appoint. And subsection 5 of section 7. What is subsection 5 of section 7? You have to give the prior consent to act as a designated partner. So, shall apply in respect of such new designated partner. He should have to give his consent to act as such. Prior consent is there. Provided that no designated partner is appointed, or if at any time there is only one designated partner, each partner shall be deemed to be a designated partner. So only one, he is a designated partner only. So the rule says that within 30 days, you have to appoint another designated partner within 30 days of a vacancy. And you have to get the prior consent from him. Those rules are also applicable when you are applying, when you are appointing a new partner, get from him the prior consent. He should have to give us prior consent and he should have to fill the form. And that should be intimated to registrar. So all those points will be applicable. Then, what happens if you are contravening the provisions of section 7 and 9? So section 10 specifies. Now, number of designated partners falls below 2, or either in this case or none of the designated partner is a resident in India. See, at least one should be resident in India, right? So at least one should be resident in India who is residing for, who has stayed in India for at least 120 days. Correct? So if either this or this is contravened, then the liability for the LLP, see, generally for here, LLP will be subject to maximum punishment, partner slightly less. That is the rule, general. So penalty is 10,000 plus this is a, when I use the word this is a continuing default, 100 per day. It is a continuing, if the default continues. So if default continues, or you call it as continuing default, then in that case, it is 100 per day. For every day, for each day, 5 days it is continuing. So 100 into 5, that you have to calculate. If you calculate it, if it crosses 2 lakhs or if it crosses 1 lakh, or say you do the calculation, it comes to 1.5 lakhs, the maximum penalty is 1 lakh. That is how you should have to read this penalty. So the maximum you are calculating, you are doing the calculation, it crosses 1 lakh, then the act says maximum, subject to maximum 1 lakh. So fixed penalty plus continuing penalty, put together it is subject to 1 lakh. Then for partner, it is the same 10,000, and for continuing default, it is 100 per day. Maximum is 50,000. So the maximum is 50,000. Then, if the LLP contravenes for failure to file the consent of appointment of DP within 30 days of appointment. So you should have to, when there is a change, you have to file it within 30 days, you have to appoint. And if that appointment is not filed, file the consent, failure to file the consent, it is a procedural default. So it is 5,000 plus 100 per day, subject to a maximum of 50,000 for LLP, and for designated partner, this is for every designated partner. You have to read it for every partner. So it is 25,000. If the LLP contravenes the provisions of 7, 5 or 9, if any of the provisions are contravened, then it is maximum is 1 lakh. This and this, it is the same. Penalty is 10,000 for individual and 100 per day for continuing default. For LLP, it is 1 lakh, and for partner, for every partner, it is maximum is 50,000. Say, I'll tell you what are all the documents that you should have to submit. We will be doing it. What is the punishment? Yes, we will be learning that soon, that we will be doing it. Oh, when is the break? Put it in the comment. Once I'm into the subject, I don't think. How many wants a break? That we will see. Shall we take a 5 minutes break? Or how is it? Yes, we shall take a 5 minutes break, and shall we meet? Now it is, let me check, it is 7:35. Shall we meet by 7:40? Or do you want 7:41? Yes. 7:42. Okay, we will meet by 7:42. Yes. So shall we continue? Yes. So we were talking about this punishment and contravention for that. The penalty for the LLP separate and partners separate. Then we'll go to the next interesting topic, namely how to incorporate an LLP. You were asking me what are all the penalties, how you should have to do it, and so on. So any incorporation, how you literally or how do you do it practically, so that we will do it. See, the word used is, when do you use the word subscription of names? See, in Companies Act, you would have got it as subscribers to the memorandum. So when do you use the word subscribers to the memorandum? For the initially first time, how they start, I will tell you practically. So A, B, C, D, and E wants to start an LLP. So they want to become a partner in that. So they have to give their names, right? So they have to contribute. So at the time of incorporation, they are the persons who have contributed. So they are called as subscribers. In Companies Act, you call them as subscribers to the Memorandum of Association. In Memorandum of Association, last page, you will be having that. So similarly, at the time of incorporation, when a new LLP is going to be incorporated, who are the partners who are going to contribute? They are called as subscribers, right? So the wording is subscription. When you are starting a new thing, incorporation, then it is subscription of names. The wordings is very important. You subscribe your name. So who are doing that? Two or more persons, because minimum it should be two persons or more persons. We also know that minimum persons should be two, maximum is unlimited. There is no restriction, because that is the feature of a company. So there is no maximum limit. What for they are doing? See, for any explanation, who, why, how, when, where. You ask these questions, the answer will come. So who should have to do it? Two or more persons. What for they are doing it? They are for carrying on a lawful business. If you write it as business, that is not complete. For carrying on a lawful business, that adjective is more important in law. Whatever they have specified, that is very important. What for? We know that one of the characteristic is that they cannot have a charitable is not permitted. It is business for profit. Business for profit. This is a mandatory must. So you have to write this with the view to earn profit. They are not doing charity. With the view to earn profit only they do. Shall subscribe. They must subscribe their names. What? To a document, not to a document, to an incorporation document. This wordings is very important. Incorporation document only, you have this word subscription. Similarly, in Companies Act, subscribers to the memorandum. So whenever these words come, understand the concept and then write it. That is more important. Then you have subscribed. So first, they should have to subscribe their names. Then you should have to file it with the registrar. So the concept is, first you have to, let me put it here, you subscribe your names, who are all the partners. Then you have to file the document with the registrar. Then the registrar will scrutinize whether everything is in order. It is not prejudicial to public interest, whether it is not violative. So he should have to, registrar will go through the documents. If he needs any correction, he will intimate the LLP to make this correction. So you will have that modification has to be done to the document. Then if he is satisfied, he will issue a certificate. That is the conclusive evidence that the LLP is incorporated. So incorporation, there is a series of steps that follows prior to the date of incorporation. So he gives a certificate. So that certificate, one date is there. So that is the date of incorporation. That is the date. Suppose the registrar issues a certificate on 17th November 2025. So this is the date of incorporation. So from this date, it comes into existence. Prior to that, it is only pre-incorporation. It was not incorporated till 16th. So this is the conclusive evidence. That's why you use the word conclusive evidence. Whatever date has been mentioned in the incorporation document issued by the registrar, that is the conclusive date that it has been incorporated. So what you have to file? The incorporation document shall be filed. To whom you should have to file? Suppose I want to start a LLP in New Delhi. So in that register, with that register, I should have to register. If I want to start in Punjab, so with that registrar, I should have to register. So with the registrar of the state in which the registered office of the LLP is to be situated. It is going to be situated, in which the registered office of the LLP is to be situated. Now we do it all the thing electronically, and he issues it electronically. That he also, the certificate also comes with the digital signature of the registrar. That is also electronical, but that will have a digital signature. So subscription of names, then you have to file the documents. Then what are all the statement to be filed? So a professional will have to see to it that all the requirements are complied with, no? So for that, a chartered accountant or a cost accountant or a company secretary can do it. So a statement in the prescribed form should have to be filed. By whom? By the professional who is engaged in the formation of the LLP. And it should also, the statement should also be given by the advocate or whoever is engaged in the formation. The statement should also be given by anyone who has subscribed his name to the incorporation document. He should also give a statement, like Companies Act, what he has to give. All the requirements and the rules made thereunder has been complied with. So that can be given only by a professional, has been complied with in respect to the incorporation and matters precedent before and whatever is incidental there. So all those things has been complied with. That statement should also be filed with the registrar in the state in which you are going to do the incorporation. So what are the contents? It should be in the form. The name of the LLP should be there. Suppose I'm going to start an LLP with ABC LLP. So that name should be there. ABC LLP. Then if I'm going to do a service, chartered accountant's firm. So what is the proposed business? What is the service? Then registered office. So which state? Address of the registered office. So that I should have to specify the exact address of the registered office. Then who are all the partners? Here the address. Exact address. Who are all the partners and who are going to be the designated partners. Their address, name and address also should have to be specified. And not only these, it should also contain such other information concerning the proposed LLP as may be prescribed. Suppose the registrar wants some other information, you should also give that information to him. So name should be there. What business is he going to do? In which state? What is the exact address? Who's the partner? Who's the designated partner? And other information concerning the proposed LLP. It is only proposed LLP. We are going to start. So that should have to be given. All these details should be given in advance. So based on that, it will be specified. So incorporation, you subscribe your names, you file the documents, and the statement, you have to file it. That should contain all these things. It should have to be complied with that. All the requirements have been complied with. And what are all the contents of that? The incorporation document, we say incorporation document. Incorporation document should contain all these things: name, proposed business, what business they are going to do, who are all the partners, DP, and such other information. Then, if any false declaration has been given or it is not true, then knows to be false or does not believe to be true, then he shall be punishable with imprisonment. It is a imprisonment and fine. Imprisonment for a term which may extend to 2 years. So you should have to write this clearly. Which may extend to 2 years means maximum limit is maximum years imprisoned is 2. This here it means maximum years, it is 2 years. It could be 1 year, it could be 1.5 years, it could be any detail, but maximum is 2 years. So that's why the wording is which may extend to 2 years, and it is and. Yes, it is and fine. It is imprisonment and fine, which shall not be less than 10,000, but which may extend to 5 lakhs. Meaning is minimum fine 10,000, maximum limit 5 lakhs. So it can range within this range. It could be anything between 10,000 to 5 lakhs. It can be any limit. So this is the penalty for false declaration. Then, shall we proceed further? Incorporation by registration. When the requirements imposed have been complied. So there is a time limit. So the registrar has taken the document. It is his duty. So the law has specified the time limit within which he has to register. Shall retain the incorporation document and within a period of 14 days. If everything is proper, he should have to give the certificate, register the incorporation document. You have filed the incorporation document. Now, the registrar should have to, within a period of 40 days, what is his duty? Or you can say, what is what the registrar does? He should have to register. That is one thing. He has to register the incorporation document because it has been filed by the LLP. Then he should have to sign. The certificate shall be signed by the registrar and authenticated by his official seal. Suppose the registrar is registered in Mumbai. So the registrar should have to put the seal, Mumbai, whatever is the office seal. So his office seal should also be there. He should have to sign. It should be signed by the registrar of that particular state, and his seal should also be there. Signed and authenticated by his official seal. Both should be there. And whatever document you have the LLP has submitted, that can be taken as the evidence. May accept the statement delivered as the sufficient, may accept the statement delivered as the sufficient evidence that the requirements have been complied with. Then after that, he should have to give a certificate that the LLP is incorporated by the name specified therein. Now you have asked for ABC LLP. So he will give a certificate, ABC LLP. This is to certify that ABC LLP has been incorporated on 17/11/2025, and whatever is the ABC LLP. So that is the name, whatever name you have given. That name should not be resembling any other existing LLP. So all those conditions are there that we'll be seeing in detail. That should not be giving an resemble or too similar or deceptively similar to an existing LLP. That name should be unique. So you cannot, I cannot start a name with Tata LLP or some other company which is already in existence, or already an LLP is in existence. So I cannot start with that name. So it is incorporated by the name specified. He will ensure that it is not similar or not in resembling an existing LLP. And after satisfying himself, he will issue the certificate that with the name specified. That name is very important. The name should be specified in that certificate, and that is the conclusive evidence that LLP is incorporated by the name specified there. So that is the identity that LLP, ABC LLP has been incorporated. So whatever certificate he has given, that is the conclusive evidence. See, limited liability company, the limited liability partnership will be established on that day, where LLP will be incorporated on that date. The same compliance formality for companies also. So that is the conclusive evidence that it has been incorporated. Now, next thing, a registered office of an LLP. And if there is any change therein, that should also be specified. So you should have to specify, you are starting with an LLP, you want to change that LLP to some other place in the state, within that state, then you have to intimate that change to the registrar. That is mandatory. So every LLP shall have a registered office to which all communications, what for he is asking, notice, as if you want to issue the notice, that can be addressed and it can be received at that particular address. So that will be in the register. If the registrar wants to issue a notice or a communicate, he wants to get the detail, so he can communicate with it. For that, the registered office or that has to be specified, shall have a registered office. And a document, if they want to serve, it can be served on the partner or on a designated partner. A document may be served on an LLP or a partner or designated partner. So it can be sent. See here, it can be sent to a LLP. See, three things. The document can be sent to the LLP or partner or designated partner. How they are going to send it? By post, or this is under a certificate of posting, or by registered post, or any other manner. As may be prescribed, and any other address. Suppose they have specified, they have given another address, that also you have to, you may kindly send, and any other address specifically declared by the LLP. Specifically declared. So even to that, the communication can be sent. by the LLP for the purpose. So the document will be served on that address also. An LLP may change the place of its registered office. Once it changes, it should have to file the notice of such change. And only if it is notified, it will take effect only upon such filing. So how will the other, see, communication is complete only when the recipient is aware of that. So the LLP wants to send a document or it wants to intimate the registrar. So in that case, the party should be aware of that communication, no? So once you file the document only, the registrar will be aware of that change. So any such change shall take effect only upon such filing of that change in registered office. Now, if that LLP contravenes, in that case, it shall be LLP and its every partner. LLP and its every partner shall be liable to a penalty of 500 rupees for each day, subject to a maximum of 50,000 for the LLP and just a minute. $50,000 for the LLP and its every partner. So the maximum penalty is 50,000. So for continuing default, it is 500 per day. Maximum 50,000 for both LLP and the partner. Right? The communication should have to be very, very clear. What is the effect of this registration? Now, once it is registered, so a legal entity is being formed. You remember? Once it is formed, it can enter into a contract, it can acquire, it can take the assets, it can acquire, hold assets, sue and being sued. The LLP can sue others. It is a legal entity, no. So LLP is a legal entity. LLP has been formed. It can sue others. Others can also sue the LLP. So suing and being sued. Wait, I'll do the revision. Common seal, it is only under any partner designated for that purpose. It has not been specified. So on registration, by its name, it is capable of suing and being sued. The LLP can sue others. Others can also sue the LLP because it becomes a legal entity. It can also enter into a contract. For that, it can buy, acquire, own, hold, develop, or disposing. You should not say buy, sell the asset. The better way of doing it is acquiring an asset, either movable or immovable, tangible or intangible. It can also have a patent, everything. So all those intangible assets can also be acquired. So it can acquire, it can own an asset, it can hold an asset, it can develop an asset, it can dispose of the property, whether movable or immovable, tangible or intangible. Having a common seal, because this is not mandatory. This is not mandatory. If it wants, it can have. But that common seal should be in the custody of one official. It has not been specified who. There should be a designated partner. No, it should be safe. The idea is it should be safe. Nobody should misuse this common seal. If it is having this common seal, see, it will be the name of the thing. It will be embossed here. The common seal is ABC LLP. So the company is signing. So just like that, a person should not misuse the common seal. So the law has specified it should be in the safe custody. But it has not specified it should be in the custody of a partner or a designated partner. No. If it decides to have one, when the common sale itself is not mandatory, those provisions are not there. It should be in the safe custody of a person. That's it. So it is the say LLP. The main concept is not to be misused. See, this is the signature. It is some person should not use this common seal and affix the signature. It is the signature of the company. So that should not be misused. That is the concept here. Then doing and suffering. It can also suffer as other acts and things as body corporate may lawfully do. Whatever is applicable to a body corporate. See, this LLP is a body corporate. So it can do whatever act which it is there. See, I will discuss this common seal later in that question. I will take it up in the next class. I have noted down your query. I will make a note and I will see to it that it is clarified. We will take up the question. See, if two partners die together, okay, so no other partner, you are asking me the question, who will do it? See, it is not going to be that LLP is not going to be run by the partner alone. The other staff will be there. So they will take care of it and they can do it, no? Someone who is connected with LLP can do it, no? So they will take care of that and do it. It's not that 2% business. 2% it is designated. Others will also be there, no? So they will be doing it. Right? So on registration, it is shall by its name capable of suing and being sued, acquiring, it can acquire the property, it can have a common seal if it wants to have one, and it can do all other acts. Right? Then name. So we saw that name should not be identical or deceptively similar with an existing thing or which is undesirable. Undesirable means you cannot have a name Hindustan or some other or what to say, a particular name which mimics or which imitates another thing. That is not accepted. It should have to end with the word LLP. So for any name, it should have to have ABC LLP, right? So it is ABC LLP. So it should end with LLP, denoting that it is an LLP. Like you have ABC Limited for company or private limited for private limited company. It should end, the name should end with LLP as its last name. Or you can write it Limited Liability Partnership, or in short, this is an agreed acronym. So you can also have it as LLP. That is there. And you cannot have a name with this identical with an existing company, with an existing LLP. Or people will think that it is linked with an existing LLP. So it should not resemble an already existing LLP. So that should also not be there. Or you cannot have, I cannot have LG LLP. So LG is the trademark. Or if it has you have a company or any LLP has got a trademark. So I cannot use that trademark name and I cannot start an LLP. That is not there. So Hero LLP, I cannot have it because there is a Hero Corp or Hero Automobile, you have that trademark. I cannot have Hyundai LLP or some other automobile name. So people will think, so I'm connected with that particular organization or that particular business entity. That should not be there because the people will be confused. So you are not supposed to create a confusion in the do something in the minds of the thing as though that your LLP is linked with that. That should not be done. That is the concept. So what is that? The word, then acronym LLP can be used, or you can have limited liability partnership fully. You can do it. And no LLP can be registered if, in the opinion of the central government, it is undesirable. See, certain names you are restricted. You cannot use certain names, that you cannot use it, or it is identical with or too nearly resembles a particular LLP or a company or a registered trademark. I am not supposed to use that as my name. Yes, we will be having the question MCQs also. That also I will be sharing with you. We will be doing it. Shall we take some MCQs? Now I'll come to a stage and then I will go for MCQs. Okay. With this I'll hold for a present, and we will do some of the MCQs and then we will continue further. You are asking me about MCQ. We will do a quick MCQ. I'm sorry. What is the minimum number of partners required to form an LLP? It is 1, 2, or 3, or 5. Put it in the comment. Of course, that is 2 is the correct answer. Yes, I find many 2 designated partners. Partners is also 2. See, you are asking if 2 partners are companies, how will the LLP appoint DP? That's why the nominees of that person should be, who are individuals, can be a designated partner. Then they should have to give their consent and they should have to comply with the formalities. Right? So 2 is the correct answer. If an LLP was incorporated on 15th September 2022, then its first financial year should be from which I somehow given. See, it was incorporated on 15th July. I'm sorry, 15th September. It was incorporated on 15th September 2022. Then the first financial year. See, I get various answers. See, what is the provision? What the provision says? I'll tell you, Mustafa. Yes. See, I get answers from so many persons. We will discuss that. See, what is the rule here? See, it could be the first financial year will be from the date of incorporation till the year end. That is, general rule is that 31st March of the next year. That is, it was incorporated on 15th September. So date of incorporation is 15th September 2022 to 31st March 2023. But there is an option. What is that option? For the first financial year, it should not exceed 18 months. So you can have your accounts for 18 months. So from 15th September. So from 15th September, so it can be, generally students will say, will make a mistake. Oh, it is after 30th September. So it was incorporated in 15th September. It cannot be from April because these two are ruled out. So why this is ruled out? This April is before the date of incorporation. So this April, it can start only from this date. From 15th April only it can start. So this is wrong. This is also wrong because it cannot be April 1st, 2022. Now, can it be this? Yes, it can be from 23. Can it be 24? The maximum limit is 18 months. If you take it for 24, so September, it's not incorporated after September. This will hold good if it is incorporated on 1st October. Then you can have it till 31st March 2024. So this is also not possible because it is exceeding 18 months. So that is also not possible. So only C is the correct answer. Right, up to 2023 only. So for those who have written it as 2024 or 26, please make that change. Have you understood it? So it cannot be 24. We tend to do that. Why, our preoccupation. We don't read the question carefully. That is our mistake. We don't read the question carefully. So that I want to make it clear. September month as well. Yes, you have to count the September. It was incorporated before 30th September. The thing says, if you read the financial year, it says if it is incorporated after 30th September. See, concept is the date specified is 30th September. After 30th September. MCQs is not visible. Okay. Wait. Oh, I'm sorry. I'll share that. So this is not possible. That is, the first thing is not possible. The second is also not possible because the rule says it is more than 18 months, right? So here, if it is there, the financial year, there it has been specified as, I'm sorry. Here the financial year, it has been specified as 30th September. So after incorporated after 30th September, so from 1st October you can count. So from 1st October you can have it till, if it is incorporated on 1st October 2022, then your first financial year can be from 1st October 2022 to March 31st, 2024 because it doesn't exceed 18 months. Now it exceeded 18 months. So only C answer is right. Yes, C is correct. So it was, if it is incorporated after 30th September, it can close its accounts for 18 months. That can be done. Then. No, this I have not dealt with, so we will take this question. Vishnu was appointed as designated partner in Vidya Masterminds LLP on 25th July 2023. By what time limit the LLP should have informed the registrar? Is it within 15 days, within 30 days of appointment? See, there is a difference, no? When they have specified the days, it falls on, because July has got 31 days. You cannot say that both are the same. Within 30 days, or within 1 month, or within 3 months of appointment. What is the correct answer for MCQ 4? So many have given the answer B. We will see. So is it within, the act has specified within, they have not mentioned within 1 month. They have specified only within 30 days of appointment. So the answer is B, right? Now, are you able to see the difference between these two? 30 days, when they have specified 30 days, exactly that 25th day is also counted. So yeah, July has got 31 days, so it will fall 1 day before. So on 24th August is the last date for complaints. You have to intimate it before, on or before 24th August. Right? There. No, this I have not done. Now who has to do it? Who's liable? Given that Samir retired and Greenleaf LLP continued with only Priya and EcoCorp Limited. That is another EcoCorp is another partner. What should Greenleaf LLP have done within 6 months to comply with the LLP? So this I've not done with. We will do it later. Suppose partner Samir retired. EcoCorp Limited also leaves the LLP and the LLP continues business for more than 6 months with only one partner, Priya. Who is personally liable for the obligations incurred during that period? Is it the Priya who is the only partner who is continuing, or Priya and the EcoCorp Limited which has left the LLP, or is it the EcoCorp Limited, or Priya, Samir and EcoCorp Limited? See, Zaid Hussain, I'll be dealing with partnership versus LLP versus company. That I will be taking care of. Both Priya and Deco, Sumar Singh, yes. See, what did we learn there? If the partner, there is only one partner who continues and he knows that he is the only partner available, he continues for more than 6 months, he is personally liable for that, right? So Priya is personally liable, but it has not specified who's that. EcoCorp has left. Now, is it? Is it the continuing partner? Who's the continuing partner? Earlier it was, see, let me put it here. So Priya was there. See, Priya was there. and Priya is alone continuing. So the lone continuing partner who is well aware that he is the only person who's the continuing partner, he is personally liable. So it is only Priya who's liable. Why you can't blame Ecocarp? Ecocarp is no more a partner. Samir also has retired. So who they can catch hold of and who can be held liable for incurred during that period. So during that period, that means when only one partner is there. So the wordings are important during that period. So during the period when only Priya is continuing as a partner, only she is liable. You cannot make others. What they will say, they are no more a partner. Ecocarp is not a partner. Priya is not a, I'm sorry, Samir is not a partner. So only Priya is there. So only Priya is personally liable for that. Correct? Only Priya is liable because Ecocarp has also left, Samir has also left. See, concept why you are saying that he is personally liable. Who is available only he can be made responsible, no? You can catch hold of him and make him liable for that. So only he is responsible for that. Right? This we have not seen. This we will see it later. Now we'll go back to that. We will be seeing it later. I'll now share the PPT. So we saw this up to name we saw. We'll quickly go through this reservation of name. So a company, I'm sorry, an LLP, if it wants to reserve its name, it can do so. Are you able to see my PowerPoint? Okay. So I can reserve my name in advance. For a period of 3 months, I can reserve my name. Till within such time, I should do the incorporation. Suppose that name. Why? What is the reason behind this reservation of name? Suppose someone else, it will not be made available to others. So there is an option. A person may apply. It is optional. You can reserve. Or what you can do at the time of incorporation itself, you can specify the name and get it incorporated. Or you can reserve your name in such form and such manner accompanied by the fee. For the reservation of name set out in the application as the name of the proposed. If I want to select the name ABC LLP. So this name I can reserve. No other person can use this ABC as the name. The name, or if an existing LLP is there, I want to change the name. See, either this is the proposed LLP. This is a new LLP to be incorporated. Or existing LLP is there. Now, can I change this name to some other name? Yes, you can change the name to a new name. Now, existing, you have ABC. You want to change this name to some other name. That name you can reserve. You want to have it as PQR LLP. This PQR LLP can be reserved by the existing LLP. Can reserve its name. So two persons can reserve either a new LLP before incorporation or an existing LLP who wants to change the name can do the reservation of name. So what the registrar will do upon receipt of an application and on payment of prescribed fee, if he is satisfied, it cannot be rejected, which is not one which can be rejected, referred to in section 15.2, which is deceptively similar or which is an existing thing. So it is undesirable or it is identical or too nearly resembles to that of any other LLP, company or registered trademark. So this portion, if he is satisfied, this is not there, then he can reserve the name for a period of 3 months. Why 3 months time limit is there? You should not take the advantage. No, once you don't use this three months time limit, this name will be allotted to some other person. If they can do it. Suppose APC wants to reserve this PQR name. Now 3 months has gone. Then some other LLP, XYZ LLP can change it to PQR. That is possible. So the time limit for everything, there is a time limit. So reserve a name from the date of intimation by the registrar. So he can reserve the name for 3 months. That is possible. Right? And rectification of name. When will the word rectification use? Some mistake. Now I have incorporated a company incorporated an LLP. Already there is an existing LLP or it resembles an existing LLP or it is identical with an existing LLP. So what I can do then, if through inadvertence, that is not purposely, by mistake or otherwise, the LLP on its first registration, that is at the time of incorporation. First registration means at the time of incorporation, or on its registration by a new name, is registered by a name which is identical with or too nearly resembles to that of any other LLP or a company or a registered trademark of a proprietor under the Trademarks Act, as is likely to be mistaken for it. Why? Because you will mistake that as connected with that. So it is connected with an existing LLP or existing company or trademark or another LLP. People will mistake that as it is connected with these entities. Then you can rectify. Then the thing starts with then. If that is the situation, then on an application of such LLP or proprietor, either it can say what some other person whose name it is resembling, they can give an application. No, this LLP has been registered. It resembles our name. So they can make an application. Who's the affected party can make an application. Then the central government, if on an application is being made, the central government, see, you should use the word direct that. See, central government, it gives an order or it directs. See, whenever this word central government comes, you should use the word direct, order. It may by order. So you should definitely use this word direct that. That is very important. Direct that. Do this. So it is giving a direction. The order, it can be in the form of an order or it can be in the form of a direction. So the central government may direct that such LLP to change its name or new name within a period of 3 months from the date of it is issuing a direction on a particular date. Then 3 months time limit is given to the existing LLP to change its name. It should have to change the name to some other name. So it will direct. That wording is important. Where an LLP changes its name or obtains a new name, then, So it has obtained, it has got a new name. Then within a period of 15 days, it should have to give a notice, no? How will the registrar know what name you have changed? I was saying change this name. What is the new name you have given for that LLP? You have to intimate the registrar. So within 15 days, you have to intimate how you are going to intimate with the registrar. So what is that thing? You have to make that effect in all the documents. Give notice of the change to the registrar along with the order of the central government. See, it is the central government which directs. Then the registrar, you should have to attach that copy of that form will form part of this order of the central government also. You have to attach this copy along with the order of central government. Who shall, here this who shall means the registrar shall carry out the necessary changes in the certificate of incorporation within 30 days to such change in the certificate of incorporation, and such LLP shall change its name in the LLP agreement also. Is this clear? Any doubts? Yes, he can reserve again after the, yes, he can file a fresh application and he can reserve the name. But with the same application, he cannot reserve the name. Yes, that is possible. But reservation of name is not possible on permanently. See, if it is available, if no one else has used his name, then the registrar will allow using this name. He can reserve this name. First application you are giving, 3 months elapsed. Then it is made available to the public. Then again you want specifically that name. If it is not used by any other person, then he will reserve the name. Suppose that name already another LLP or any other company has been incorporated, then that name will not be available for reservation. That is not possible. Yes, even in the Trademark Act, you cannot resemble either trademark also you cannot resemble. It should not resemble. Yes, suffix LLP is compulsory. That is a must. Right? We will do a quick recap of what we learned today by going through the slides. I'll wind off after seeing that. So we saw a quick, rapid revision. Shall we? Can you spend another 2-3 minutes? We will make a quick recap. LLB was formed on 2008, but it came into effect only from 31st March. And it has got 81 sections and 4 schedules. That 4 schedule, first schedule deals with mutual rights and duties. Second schedule with the conversion of firm. Then you will get a thing, firm, private company, unlisted company. So that can be converted. Unlisted public company cannot be converted. Right? Then Indian Partnership Act is not applicable. Then need for LLP. We saw that statute-based governance and traditional partnership, professional expertise, efficient manner, internal structure, then flexibility, all the 5 points should be there. Then what is the meaning? New form of business entity, alternate corporate business vehicle. They can organize their internal structure and it is liable. LLP itself, that itself is very important. LLP itself will be liable for the full extent, the partners are not liable. They are liable only to the limited extent of their capital contribution. Then we saw the address, usual residential address, and body corporate, it is the address of the registered office. Then inclusive definition, it includes and does not include LLP registered under this act, incorporated outside India, and company incorporated outside India. And you don't take into consideration this cooperative society, corporation, sole, or any other body corporate which central government by notification specify in this behalf. Business, trade, profession, service, occupation, except any activity the central government has excluded. Chartered accountant means chartered accountant plus as defined and who has obtained a certificate of practice. Then financial year, we did a MCQ also. For the first year, it is 18 months. So the thing is, after the 30th day of September of a year. Then foreign LLP formed, incorporated, registered outside India, but some business connection is there. Place of business is within India. Then LLP agreement should be there between the partners and between the LLP and the partners, and read with first schedule. If the LLP agreement is silent, first schedule will be applicable. The name for a partner, for an individual, forename, middle name, surname, everything you should have to give. For a body corporate, it's registered name. Regional director is RD, and registrar, deputy, additional, joint, whatever name he is called, it comes under the registrar. Small liability, limited liability partnership, contribution is 25 lakhs, turnover is 40 lakhs. Of course, you have that 5 crores and 50 crores, not exceeding such higher amount, 5 crores or 50 crores. Characteristics, we had it as a body corporate, perpetual succession. Men may come and go, but LLP goes on forever. The same concept applies here also. Separate legal entity and mutual agency of the partner is there. And LLP agreement should be there. Artificial legal person, only it is created by law and only law can put an end to it. Common seal not mandatory, but if it is there, some responsible official. See, some student was asking that doubt. Some responsible. It is clearly specified under the custody of some responsible official. He has not specified partner, designated partner. So some responsible official. Official, any person connected with that LLP. And it should be affixed. If it is going to affix, then at least 2 designated partners should be there. In the presence of at least 2 designated partners. Then agreed contribution, one only designated partner is liable for the legal compliance. Minimum 2 partners, maximum no limit, only for business for profit, no charitable or non-economic purpose. Then conversion into LLP, that can be there. I stand corrected. Here it is a typographic error. And foreign LLPs can also be formed. E-filing of documents is there, of course, with the use of a digital signature. It can be filed only in the website mca.gov.in. So advantages, 6 advantages: easy to form, easy to dissolve, limited liability for the partner, capital structure, organized on the basis of agreement, and legal and procedural requirements. Partners, 3 disqualification. If he is found of unsound mind or undischarged insolvent, or he has applied to be adjudicated as an insolvent and his application is pending, then he cannot. But a person, an individual or a body corporate can be a partner. Right? Designated partner, individual, who can become a partner? Individual, LLP, company, foreign LLP, limited liability, companies. Cooperative society, corporation, sole cannot become a partner. Similarly, HUF also cannot become a partner in LLP. Minimum is 2. So here it has been specified, no, in that Priya case study which we did, at least 2 partners. If it is reduced below 2 and the LLP carries on business for more than 6 months, then the person who is the only partner of the LLP during the time that it so carries on business after those 6 months and has the knowledge of the fact that it is carrying on business with him alone shall be liable personally. So that Priya LLP, in that LLP, Priya, Samir and EcoCorp were the partners. So this act has specified only the LLP. In that LLP, the partner, the person who is the only partner, so he is only liable. So there only Priya alone is responsible. Designated partner, 2 designated partners, at least one should be resident in India for 120 days. So if all the partners are one individual and one body corporate, 2 individuals should be there. If that is only body corporate, then the body corporate should have to nominate the individual as the designated partner. So they can act as a designated partner. So some students were asking the question, doubt. So the body corporate should have to nominate that individual who has to act as a designated partner, and they should have to comply with the formalities. If the incorporation document can specify such persons, or if it can also specify all the partners should be designated partners, then every partner shall be a designated partner. He can cease in accordance with the LLP agreement. So their agreement is important. Prior consent is there. Should have to be filed with the registrar within 30 days. And he should have to get a DPIN, direct designated partner identification number. Liabilities, he is responsible for compliance and filing, and he is also liable for penalties. When you talk about liabilities, where he is responsible and what penalty he gets. So changes should have to be intimated within 30 days of vacancy, provided that if no designated partner is appointed, or if at any time there is only one designated partner, each partner shall be deemed to be designated partner. See, the partners could be 5, but designated partner is no person has been appointed. So that case is covered here. Only one out of 5, only one has been designated. The other partner is not there. He has resigned. So in that case, each partner shall be deemed to be designated partner. When there is only one designated partner, there are 5 partners. See, the laws clear. So I'll write this alone. See, 5 partners are there. 5 partners are there, out of whom 2 are DPs. Out of that, 1 has gone. He is no more. So in that case, the remaining 4 partners will be DPs. If at any time there is only one designated partner, each partner shall be deemed to be a designated partner. That is the meaning for this particular point. Then penalty we saw. Then subscription of names and filing of documents, and the two to earn profit. And you have to specify the address. Everything, the statement should have to be given that it is requirements have been complied with. You should have to give the address, proposed business, all those details. Penalty, 2 years, minimum 10,000, maximum 5 lakhs. Then the registrar should have to register the document within 14 days. That is the conclusive evidence. Seal, he should have to sign, and seal is important. Then any change of registered office should have to be intimated. And if there is any default, continuing default 500 for each day, but maximum is only 50,000. What is the effect of registration? It can sue and capable of being sued. It can acquire, it can have a common seal and name. you cannot have an undesirable or identical with or too nearly resembles another LLP or company or a registered trademark. That is not possible. Then reservation of name for 3 months. You can reserve the name. Rectification, if any mistake has been done, the registrar can ask the LLP to rectify the name. The central government can direct the LLP to change its name within a period of 3 months. And the company, the LLP should have to specify within 15 days what name it has changed. I have stopped up to this. We will continue in the next class the remaining thing. Yes, shall we stop it and call it a day, or any doubts is there? You are welcome. Yes. Yes. Wait, I'll clarify this in the next class, Mustafa. Yes. I've noted down your doubt. I will clarify it. Don't worry. Okay. Welcome, everyone. And we will stop with this for today's class, and we will continue in the next class and go through the material. So exactly, kindly go through the material and read it. Yes, good night. So we will stop with this for today's class. Good night, everyone. Yes, done. Yes.